Information shared on the following program is for general information purposes only. It does not constitute legal, tax, investment, or other advice, nor is it intended to recommend any particular investments, products, or financial instruments. Always seek advice from your financial advisor, attorney, or accountant with regard to investment, legal, or tax questions.
Welcome to the WorryFree Retirement with your host, the author and creator of the WorryFree Retirement himself, Tony Walker.
Well, hello and welcome to the WorryFree Retirement. I am your host, Tony Walker, and for the past 30 years, I've made it my life's work to try to help savers worry less about money, and that's the type of show you've tuned in here today. We always like to say today's date. Today's date is November 25th, 2013. That's because in the financial world, things can change lickety-split, as you might know. So we want to make sure we keep that relative. Also, we'll talk a little bit about Thanksgiving. So by the time some of you in the other viewing areas happen to see this show, the show is pre-recorded and shown throughout a total of 9 different markets throughout the country. It may seem a little dated, but hopefully it'll also be relative. Before we get into today's meat of the program, I want to go over a couple of things. First of all, this whole notion of the difference between savers, investors, and speculators. It's something I refer to as the 3 personalities of money. So if you're watching this show, maybe even for the first time, and you're saying, what the heck's this guy talking about? What's a saver? Well, we're going to show you. You can go to our website. This is a personally done, field-tested website. In fact, the actual questions you can take through the free test are at 3personalities.com. These questions were constructed by faculty in the psychology department at Western Kentucky University. I'm based out of the Bowling Green, Kentucky area, and that's why I use those folks. I have a degree in psychology along with communication, so psychology is near and dear to me. And the reason I created this is over the past 30 years, and many people are starting to jump on the bandwagon, I've always felt that human behavior helps explain a lot of finances. It's not always about X's and O's. It's about understanding thyself, understanding people's level of risk, and why many people, in my opinion, and this has been borne out over the years in study, are simply not wired for risk. They should know their personality, and that's why this show is the only show in the country that dedicates the information toward savers. So again, if you're wondering what kind of financial personality you might be, just log on to 3personalities.com, take the free test. You can also download my ebook, the 3personalitiesofmoney.com, which will help you understand more about this exciting new concept of knowing thyself and mind over money. As well, if you're watching from the different markets today, you have a chance to win not 1, not 2, but 3 of my books that I've authored. Let's throw those up on the screen. I've written 3 books over the years. The first one, which the show this is titled after that book, is called The Worry-Free Retirement, an exciting new way of thinking. In this book, after 9/11, I began to chronicle things that are now coming to the forefront of news. Well, this was stuff, folks, I was talking about for years prior to a lot of people jumping on the bandwagon with this as well. A great book to understand more about retirement, what does retirement mean to you, how to clarify your vision, and how you too can create a worry-free retirement based on what you want rather than what the financial world out there keeps telling you you should have. That's the first book you can get absolutely free. Then you can also get the copy of Don't Follow the Herd, a great story about Wally World, and also gets into some safe money solutions and products that you need to be aware of. And finally, again, this is for the first 10 people that go to our website in all of our markets. You would get the 3 personalities of money. So how do you get these 3 free books? You simply log on to TonyWalkerFinancial.com. You go up to Contact Tony. Now again, you got to put all your information or we can't send you the books. So you've got to click on Contact Tony. You will give us your name, phone number, mailing address, and put in there, I want the 3 free books. A lot of people contact me there, so if you don't put I want the 3 free books, we're not going to know what in the heck you're wanting. So again, TonyWalkerFinancial.com, contact Tony, tell us your name, phone number, and address, and that you want the 3 free books. The first 10 in every market will get those. All right, enough of the preliminaries. The show wouldn't be quite complete without an introduction, of course, to America's favorite financial sidekick, Mr. Aaron Orander. Let's give it up for Aaron. What's happening? You love that introduction, don't you?
I do. I love it. I'm getting used to it, and it just feels right.
And it's kind of like the more I repeat it, even I think it just feels right for Aaron to be America's favorite. And I keep scouring the landscape. There are no other financial sidekicks out there, Aaron, so you're the only one. You're the Ed McMahon of the financial world, is how I put it.
Well, I love it.
Hey, real quick, anything exciting in your life this weekend?
This weekend it was kind of, kind of a work weekend. You had me out there in the trenches. I was getting the next Perfecting Your Walk-In Retirement ready, so we've got that ready for today. But other than that, not really much. A little cleaning of the house, getting ready for the holidays, getting ready for Thanksgiving.
So don't say that I lied, but that whole part about never any nights or weekends, that's not really held up too well, is it?
Oh, it's all right. I enjoy the work. I do.
I got to tell you this quick story. We were at the cabin, my wife and I mean, we were drinking a cup of coffee. Now, I love the outdoors. Mm-hmm. I'm just not outdoorsy. My idea of being outdoors is sitting in a heated sun porch and watching the wildlife with a cup of coffee, not actually being out there with them. But a buck, a big deer, I'm talking with antlers. I don't know anything about deers. They call them bucks when they have the antlers, right? I mean, that puppy just walks right across Saunders. He wasn't 20 feet from us. Wow. So it was really cool to see that. So exciting stuff at the Walker clan. Shows you I'm pretty excited as I get older. I see a buck walk by. My wife, neighbor next door, lived up there for years. He's only seen one deer in all those years. So I just thought that was cool that happened. Oh, real quick, and I got to tell you this was funny. I'm listening to the radio on the drive to Louisville where we record this show, obviously. Yeah. And I know we're pre-Thanksgiving. By the time these people watch the show, it'll be Thanksgiving. I love this. They had an expert, this sounds like finances in the world, expert on what humans should eat and being careful to eat too much. And of course, we have 3 dogs in our household. But what kind of scared me a little bit, it says we're not supposed to feed table scraps to dogs because it can make them sick. Mm-hmm. Now, what's your first reaction to that?
I'm glad I'm not 5 anymore because I'd have to eat everything on my plate.
Well, I'm kind of wondering. So we're eating it. I mean,
we're
it makes
eating
a dog sick. I don't know. I'm sorry. Hey, real quick before we get into the meat of the program, let's do your usual bit about telling about Facebook and all the other stuff we've got going on. I'm going to jump over here to the board in just a second. We've also got a cool question that came in after you intro Facebook. So we'll get into that.
Yeah. Great, let's do it. Okay, we just want to remind everybody to go to Facebook and like the official Tony Walker Financial Facebook page. Each week I'm going to be picking a winner on those list of likes to win the brand new Tony Walker Financial tote bag. Okay, this is a brand new item that Tony's came out with. A lot of people love them. We've given several away. Last week winner, Penny Capes. Congratulations to Penny. You got in touch with me. We've got that sent out to you, so just go to Tony's Facebook page and like the page, and you'll be in the drawing for this week, okay? We also want to remind everybody that Tony has a YouTube channel. Go to youtube.com and type in Tony Walker Financial. You'll see Tony's smiling face right there, and just click on that. We've got loads of videos on there. We've got past episodes of the Worry-Free Retirement. We've got these new Perfecting Your Walk-In Retirement segments that we're going to be doing. We've got questions that people have asked Tony throughout the years. We've just got all kinds of information on there. So again, Facebook, go and like it. YouTube, go and subscribe to it.
Aaron, real quick before we get into today's program, which folks is pretty much about tax planning. What have you, I know you were formerly in TV and you're getting more acclimated to the financial world. When you think of what you've learned from watching this show and being around me in regards to taxes, how would you summarize that?
Taxes, I've heard different sayings throughout the years, the more you make, the more they take. People always think, well, if I just made more money, but, if you make more money, you're in a higher tax bracket. They're going to take more out. I've also learned that, $1 can be taxed several different ways. So you've really got to be careful. You got to really watch your money because just over time, your money can just be eroded by taxes. And then when you get to retirement age, all this money that you thought you should have has been, taken out or deducted or whatever the right terminology is they want to use.
So for savers, if you were paying extra taxes that you didn't need to, that would be, for savers, a waste of money for anybody, but especially savers. You've learned that savers hate costs. So I want to, we've got a Tony in the Trenches you did. I'd like to play this for the folks out there. Watch this particular Tony in the Trenches, and we're going to delve into taxes throughout this program, folks. It's going to be a really interesting program.
Hey, Tony, I have a question. Do you have the capability, or is there someone that can work with you other than my tax man who could tell you when should we start drawing out our annuities? When is the right time in order to find out so we won't lose on our taxes?
Great question. And when we come back, I'm going to delve into this whole issue of taxation. Not only tax deferred, especially with annuities, but also taxes you could be paying over and over again. I'm Tony Walker with the WorryFree Retirement. You're going to want to stay tuned for this next segment as we delve into how to save money on taxes. How would you like to find a trusted advisor in your area who practices and preaches the same safe money solutions that I speak of on this program? Well, you can by simply logging on to TonyWalkerFinancial.com and clicking on the Find an Advisor link. Once there, just fill out the confidential profile and submit it. This free service is available to savers who are serious about safeguarding their money. So what are you waiting for? Stop worrying and log on to TonyWalkerFinancial.com. Well, welcome back to the WorryFree Retirement. I'm Tony Walker, and as promised, we're really going to get into this issue of taxation. Now, it's interesting with that last question. You notice what he referred to, his tax man. In other words, he is referring to his accountant. Now, first of all, I have great respect for accountants. I'm just not happen to be one. Accountants do what we call income tax preparation. Majority, I'm not going to speak for all accountants, but majority of accountants don't do tax planning when it comes to retirement planning. I know this for a fact because several years ago, I attended a 2-day workshop, educational workshop for continuing education for CPAs and accountants. Now, being an investment advisor, I was able to get some continuing education credit, so I said, well, shoot, I'll just spend 2 days in there and learn about accounting. Quite frankly, folks, I just could not handle it. What I was hoping they would cover a lot on tax planning regarding retirement accounts. And what was interesting, out of this full 2 days, only 30 minutes in this particular workshop was spent on the taxation of assets and retirement accounts. That's because accountants have so much they have to keep up with. So a lot of people will go to their accountants and they expect tax planning around their IRAs and retirement accounts, tax planning around their annuities, and many of these accountants, quite frankly, do not want to delve into that. So what I tell people is we do tax planning moving forward. We're not looking in arrears doing income tax returns. That's the job of most accountants. What we're trying to do is look ahead and help you save on taxes. So let's kind of delve into this whole issue of annuities. As you know, if you've watched this show for savers, I'm a big proponent of fixed annuities. That could be fixed interest annuities, fixed indexed annuities, or I like to call them hybrid annuities, or immediate annuities. Now, the reason we don't talk about variable annuities on this show is because variable annuities are geared towards investors. They have the potential for a lot of growth, but they have the potential for a lot of loss, plus they have very high fees, which savers do not like. So if you contact us or you talk to one of our representatives in one of the other markets, they're going to want to talk to you, if you're a saver, about the many advantages and the difficulty sometimes in understanding these fixed annuities and why they get kind of lopped in with variable annuities. Two totally different animals. But let's focus on the tax issues of any annuity. Let's slide over to the whiteboard here. And what I did was I imagined, now remember, this is imagine we're talking about non-qualified money. For the discussion here, non-qualified means money that's already been taxed. You heard Aaron refer to this concept of taxing dollars over and over again. So what we mean is, let's say you've already paid $1 in tax, and now we're going to put this in a tax-deferred annuity. So basically, let's look at the calculation here. If you have $100,000 at 5%, and you're in a 25% tax bracket, I'm going to just use ballpark figures here for now, you're going to have approximately $450,000 in an account. Depending on what it earns, we're saying around 5%. So you have $450,000. That's what we call, pin's about out, that's what we call your future value. And I know that all sounds well, but the problem is with an annuity is you still owe the taxes. In other words, if you were to liquidate this annuity, or this happens a lot when people die with an annuity, this $450,000 annuity is going to go to your beneficiaries. The problem is they're going to owe taxes. I'll use red for effect here. They're going to owe taxes on the difference between your basis of $100,000, which leaves $350,000 subject to taxes, and depending on their tax bracket or your tax bracket, you're going to owe 25% of $350,000, and this catches people off guard a lot. So the point is, and we covered this on the last show, what is really the advantage of annuities? The advantage of annuities from a tax standpoint is it saves us something called lost opportunity cost. Remember, lost opportunity cost means that if you give $1 away to anybody, remember the 4 costs of money, you have taxes, interest paid on loans, you have fees, and then you have insurance premiums. Those are your 4 major costs. So if you have a cost, in this example we're talking about taxes, and you're paying that tax every year, unlike an annuity where you don't pay it every year, you may or may not have tax savings with an annuity, but what you definitely have is what's called savings on lost opportunity cost. What I'm going to do, let me show you the next graphic we're going to cover. We're going to have to use the next segment to do this. What I'm going to do is I'm going to compare a tax deferred with a taxable. So let's set the stage before we take a break here. Let's kind of zoom in on this. So let's say Joe Lunchbox A has a tax-deferred annuity, Joe Lunchbox B has a taxable account, and maybe Joe Lunchbox B says, I think I'm going to put that in CDs or mutual funds or bonds or whatever. And over the last several years, let's just say on average, you can't get this now in a safe investment, but just on average for discussion purposes so we can compare it to an annuity, we make 5%, all right? So what we're going to set the stage is when we come back, Joe Lunchbox has $100,000 already taxed. That's called a non-qualified account. We're assuming he's going to make 25%, but we also have to bring in this tax bracket now of 25% over the next 30 years. And already you can see this equation down below that we're going to have to calculate, and now we're introducing LOC. It's going to startle you what's going to go on over the next 30 years. So again, when we come back, I'm going to be showing you the difference between tax deferred and taxable, and this concept of lost opportunity cost. And if savers gravitate and understand this premise, you are going to put thousands and thousands of dollars right back in your pocket. I'm Tony Walker, and I'll be right back with the Worry-Free Retirement. For nearly 30 years, I've made it my life's work to help savers worry less about money. And now I invite you to personally contact me to discuss your situation to see if I can help you. It's very easy. You just log on to TonyWalkerFinancial.com and click on the Meet with Tony link. Or if you like, you can attend one of my free financial workshops. As always, there's never any cost or obligation to meet and discuss your situation in private. So what are you waiting for? Log on to TonyWalkerFinancial.com. Well, folks, I hate to say it, I didn't know America's favorite financial sidekick could get grumpy. He thought I was going to finish up the show without the Perfecting Walk episode that he worked so hard on over the weekend. So as not to lose America's favorite financial sidekick, let's real quick roll with this particular 2-minute video he did over the weekend about how other people are enjoying a worry-free retirement. And I'll be right back right after this video.
The word retirement can bring about various emotions and thoughts for different people. Some see it as an unreachable goal requiring loads of money. Others picture themselves in a state of relaxation, with a full schedule of their favorite activities and simply, well, worrying less. Jay and Susan seem to be closer to the latter of these extremes. Retired now for a few months, they enjoy their time together and are thankful for the sacrifices they made in order to be where they are in life. Like so many other people, they had the typical questions when thinking about retirement.
Do I have enough money? Am I going to be bored? Am I going to regret this? Am I going to want to go back to work?
But with the proper planning, those questions were met with reassuring answers.
As far as money concerns and things that really that I control, no, I feel very happy about it.
But retirement is something we all should consider before it's too late.
That's who we do it for.
So what should the younger generations consider now to prepare for the future?
If you can find something that is like a safe investment and not so much risky and 15, 20 years down the road, I think you'll see that it probably will pay off.
So preparation is a key. But there's another word that kept coming up with Jay and Susan.
So be patient.
Patience.
Oh, I love it. Patience is the key, and especially when you're dealing with the time value of money economically, you got to understand that. Good job, Aaron. All right, let's go to this board real quick. This is cool stuff, folks. Okay, where we left off, Joe Lunchbox B has a $100,000 taxable account. Let's say he or she invested $100,000. He's all excited because at 5%, there's $5,000 in interest. Now, what does the financial world tell you to do? Leave it with us. Let it compound. Compound interest is a wonderful thing. Of course, all the while they're using our money, which is great, but may not be so good, because what happens is Joe Lunchbox owes immediately $1,250 in taxes. Now, the problem with that is Joe Lunchbox pays that money, it's gone forever, and he loses not only the $1,250, but if he could have made 5%, he also loses $83 in interest, okay? But here's the thing. We're told to leave it with the institution, so now we have $105,000 with the institution. We never knew that we really had to pay taxes because all this stuff gets buried in our tax return, and our accountants never talk about this with us. And then we earn $5,250 the next year, and they say, everybody says all is well in Mudville. Well, no, it's not, because what happens is now, using the same numbers, your tax just went up to $1,300. But again, it's coming out of your pocket, it's buried in the tax return, you don't know the difference. Now all of a sudden the LOC is another $194 because you don't have this money to invest, you lose 5%, and we get some real problems. So let's talk about what Jay and Susan were talking about. Let's move this fast forward. So here's where the tax planning comes in. 30 years, and let's try to figure out what is this lost opportunity cost that's gone forever, that nobody will ever see except the financial world. What does it really cost Joe's consumer over the next 30 years to pay these taxes over and over again? Oh, by the way, a really good book on this. This is a great book for savers called The Millionaire Next Door. Really good book. And one of the lessons learned from these millionaires that nobody knew were millionaires because they're not spending money like crazy and they're following some of these principles is try not to pay a tax on the same dollar more than once. And in this illustration, what you're finding out here, what you're going to see, is most of you are paying taxes not once, not twice, but over and over and over again. And the problem is it's like a financial headwind. You don't see it and you don't know it, but it's real. So let's go out 30 years, okay? Let's see what the balance would still be left in the account. With the financial world's around $411,000. You're feeling good because the interest off of that's around $20,000. You're feeling real good. But now look what's happening. What's Uncle Sam want? Ooh, that tax just for the year went up to $5,100. So by the time you add up taxes, the total, we've totaled it up for you, of $79,000. So now we're up to $182,000. All right, so if we can kind of sneak out here, Aaron may have to change angles while we're doing this. So Aaron, remember our first tax was 25% of $350,000. Now all of a sudden it's the same tax. The problem is we've added LOC. I don't know if you can do the math real quick, but 25% of 350 is not 180, is it?
No, it's like 80. Is it
80-something thousand.
Yeah.
So folks, in this example, what we're finding out is we have increased our cost just by compounding taxes by almost $100,000. And see, what many of you believe and what the financial world is telling you is, hey, in order to have a worry-free retirement, you've got to risk your money. You don't understand taxes and fees and all that. That's okay. Give us your money. We'll take care of it. Let us try to earn you a higher rate of return. You know, we talked about last week, one of my concerns is many of you have been on the sidelines, and I know you're frustrated with low interest rates, and now you're thinking about jumping into the market. This is a very scary time for you. And if you're a saver, I would say, as Jay and Susan remind us, be patient, be proactive. Get with a retirement specialist who is not trying to always chase wild returns and put your money at risk, but rather get with a retirement specialist who understands cost and the simplicity of creating a game plan that lowers your costs so you can put more money back in your pocket and keep that money working for you rather than somebody else. I'm going to close out this segment. We'll be back in just a second, but I want to close out this segment with something very interesting. If we've got the Elmo handy here, let's call up that article real quick, Aaron, because this article, which we're going to dive into next week, it was geared towards wealthy clients and regarding Social Security questions, but this can deal with anybody. If you slide down there, Aaron, just a little bit where I've highlighted where it says, by deferring the start of Social Security from 62 to age 70, your annual benefit will increase by 76%. Later on it talks about this is known as file and suspend. So folks, I hope you've enjoyed today's program. We're not done quite yet. We're going to take a quick break, but I'm kind of prepping you because on next week's program, many of you are hearing, and you're hearing about all these workshops and seminars and ways, even the radio. I heard a guy saying how to save $100,000 in Social Security with this little known trick. This is what they're talking about. So before you rush off and make decisions on Social Security, next week you're going to watch the program because we're going to dive into how Social Security works, the taxation of Social Security, and these latest strategies that are being talked about called file and suspend. Well, I'm Tony Walker, and we'll be right back with a few closing comments. You stay tuned. How would you like to find a trusted advisor in your area who practices and preaches the same safe money solutions that I speak of on this program? Well, you can by simply logging on to TonyWalkerFinancial.com and clicking on the Find an Advisor link. Once there, just fill out the confidential profile and submit it. This free service is available to savers who are serious about safeguarding their money. So what are you waiting for? Stop worrying and log on to TonyWalkerFinancial.com. Well, folks, this is Tony Walker, and if you're in the Southern Kentucky viewing area, you can call me personally. I'd be happy to help. You just go to TonyWalkerFinancial.com. If you're outside the Southern Kentucky viewing area, and this is for everybody watching the show today, the first 10 people to request the free books, all 3 of them, Worry-Free Retirement, Don't Follow the Herd, and the 3 Personalities of Money, we'll send those to you, a $49 value, absolutely free. First 10 that go to the website and contact me, we need your name, phone number, and complete address. And for the Worry-Free Retirement, I'm saying Tony Walker, and have it a great day and be worry-free.
You've been watching the Worry-Free Retirement with financial advisor Tony Walker. To ask Tony a question or to find an advisor in your area, log on to TonyWalkerFinancial.com.